okay, Matt, let's just pop over this Cushman Wakefield piece. It's good. It's a good one. Right?
Yeah.
Stick around for this one, everybody.
So we're kind of talking about what happens next. Yes, credit's tight. Yes, interest rates are high, and people are looking. That people are kind of looking for deals. Sellers aren't ready to buy, but we are in the beginning moments of an adjustment period, and for Cushman & Wakefield, we're getting into this pause and pivot mode that they say for the Fed, where which will give CRE markets the predictability, clarity to enter this price discovery mode. And lest anyone misinterpret what price discovery means, I think that I really like this quote here. It says, rate cuts should not be misconstrued as the ultimate savior. Policy rates will ease, allowing for the yield curve to eventually uninvert, yet policy and base interest rates are not going back to zero. They're going to normalize and settle in higher than they have for the last decade. That's it really. It's kind of this higher for longer. And we mentioned this last week when low inflation numbers led to a stock market rally where it just seems like everyone is looking for the slightest excuse or the slightest sign that interest rates will go back lower. And they're getting, I think, maybe a little too excited and too spendy, and I think that makes the Fed really scared. If they take it down.
There were some comments by a Fed official, I think from yesterday, trying to throw some cold water on that idea, that essentially saying that December rate, a rate hike in December can't be taken off the table, but it to me it seemed like a really clear just attempt of trying to throw some cold water on it because things are starting to heat up, and I believe the markets now are projecting a 0% chance of a rate hike in December, and so they're trying to not let inflation pick up, and hopefully getting too geopolitical, but potential ceasefire in the Middle East could potentially be good for long-term non-inflationary pressures, back not getting into the politics of the conflict there, but typically, wars are inflationary. And so if we don't have to be dealing with another front that and disruptions in the Middle East, which could eventually turn into, higher oil prices, et cetera, could be a good thing for the economy and not having more inflation.
It is interesting to think about what are the drivers of inflation, and we've seen the CPI, and there's a PCE, a personal consumption expenditure, and there's also a survey of consumer expectations that the New York Fed does of what inflation is going to be in a year. And basically they have 3.6% is the average of expectations. And it breaks down a little bit with higher education and income levels correlated with lower inflation expectations, landing on 3.2, which is what CPI is. But lower and middle income and education levels have it at 4%, which is higher. And it does seem like they're feeling inflation a lot more.
I mean, that makes a lot of sense.
Yeah.
I mean, the smaller the income, especially on a lot of those, just consumer, non-discretionary, items, food and gas and, your rent, even though it's, try telling somebody, it's like, well, your rent it's not as bad as if you were putting a down payment on a home. It's like, okay, well, my rent is still expensive. Like, I don't care. Like, comparing me to something I'm not doing.
I don't
care. So, whereas, if you're raking it in, at some point you don't even know what the price of milk is, and so you're and maybe you're paying if you're making over $100,000. Maybe you're looking aware of what CPI is.
And the price of food is a much smaller.
Exactly. Even if you don't know, it's not hitting you as hard as someone who's making,
and this is directly relevant for multifamily because this kind of below 100K a year income is a little bit more in the audience or the consumer base of apartment renters.
At least, especially in workforce housing, I'd say 50 to 100K is more, you're kind of more B class. Well, you got all the classes here.
Yeah.
And yeah, so that's one of the good things about, if you've got a class development and an A class location, that often you can sometimes have a resident base that doesn't care that much about price.
Yeah.
We did a deal. This isn't like our textbook deal, but we did a deal where, I described the prospects as those that when they're searching for something in an apartment, they're searching highest to lowest, not lowest to highest.
Yeah.
They're like, show me the most expensive things. I think I just want the nicest thing. And I might not, if there's a better thing for cheaper, I'll maybe consider that, but just show me the nice stuff. And like, I'm just less price sensitive, I guess.
Yeah.